Over the past few months, concerns about a potential recession in the United States have been growing. From rising inflation to fluctuating job markets, the economic landscape is shifting. But what does this really mean? Are we heading toward a recession, or is this just a temporary slowdown? In this video, we'll break down the key indicators, explore expert opinions, and help you understand what's really going on. First, let's define what a recession actually is. A recession is a significant decline in economic activity that lasts for more than a few months. It's typically marked by a drop in gross domestic product, GDP, rising unemployment, and reduced consumer spending. Historically, recessions have been triggered by various factors, including financial crises, external shocks, or policy mistakes. But how do we know if we're heading toward one? Let's look at the key indicators. Economists rely on several key indicators to assess the health of the economy. First, GDP growth. If it declines for 2 consecutive quarters, it's often considered a recession. Second, unemployment rates. Rising joblessness is a red flag. And third, inflation trends. While some inflation is normal, runaway prices can stifle economic growth. Right now, we're seeing mixed signals. GDP growth has slowed, but unemployment remains low. Inflation, however, is at its highest in decades. So, what's the verdict? Experts are divided. Some believe the U.S. economy is strong enough to avoid a recession, pointing to a resilient job market and consumer spending. They argue that the Federal Reserve's interest rate hikes will curb inflation without causing a downturn. Others, however, warn that the combination of high inflation, rising interest rates, and global economic uncertainty makes a recession almost inevitable. Who's right? Let's dive deeper. To better understand the current situation, let's compare it to past recessions. The 2008 financial crisis was triggered by a housing market collapse, while the 2020 recession was caused by a global pandemic. Today, the drivers are different: high inflation, supply chain disruptions, and geopolitical tensions. While history doesn't repeat itself, it often rhymes. Are we seeing a similar pattern? So, what could happen next? There are 3 main scenarios. First, a soft landing, where inflation eases without triggering a recession. Second, a mild recession, a short-term economic contraction that corrects imbalances. And third, a severe recession, a prolonged downturn with significant job losses and economic hardship. The path we take depends on a variety of factors, including government policy, consumer behavior, and global events. While we can't predict the future, we can prepare for it. Start by building an emergency fund to cover unexpected expenses. Diversify your investments to reduce risk, and focus on reducing debt to improve your financial resilience. Remember, economic cycles are a natural part of the economy. What matters most is how you respond. The question of whether the U.S. is heading toward a recession remains unanswered. But by staying informed and prepared, you can navigate whatever comes next. Thanks for watching. Don't forget to subscribe for more insights on the economy and beyond. See you in the next video.